So what I'm going to do is I'm going to allocate so much capital and buy so many properties that I'm the one who controls the speed of the recovery.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello, welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me, I've got Nikolai Ray. Nikolai, how are you doing today?
Hey, Todd, how's it going?
It's going well.
Awesome.
So Nikolai and I met a few years ago at a real estate conference, and I guess, stayed in touch mostly through social media since then, but definitely wanted to, and excited to have you on the show. So Nikolai, why don't you give our listeners a bit about your background, what you got going on today?
Sure, Todd. Well, number one, I really like barbecue, as you know. We had a chance to share some good barbecue in Nashville.
Yeah. Tennessee, always got good barbecue.
Oh yeah, good barbecue and good bourbon.
Yes.
But I'm the CEO of MREX. MREX is a real estate technology company. Essentially, what we're doing is we're building a terminal that is similar to the Bloomberg terminal, but for real estate investors. So centralizing the real estate marketplace, bringing data, information, insights, and perspective to help multifamily real estate investors, especially at the small cap retail level to mid-market kind of syndicator level, to help them play, with the same kind of tools that the big boys have. So that's what we're doing right now, technology-wise. We also have a college called the AMREX College, which is essentially filling the gap in between all the universities and the mentorship and coaching programs in real estate. So what we're doing is we're applying very university level education, but in a very specific manner to say multifamily, with a lot of practical and applied knowledge that maybe investors are not getting in the coaching programs and the mentorship programs. So our goal there is to kind of support all the different mentorship and coaching programs that exist in the US and also in Canada, and support those programs and support the investors with maybe some more advanced and deeper theoretical knowledge and applied knowledge and data and stuff like that. So I teach financial engineering, real estate financial engineering at the AMREX College, and we have a flagship program called the Certificate in Real Estate Financial Engineering. So been doing that for 5 years now. We've had a couple thousand investors come through our doors. And on top of that, well, I'm also a real estate investor with two buddies. We have our own real estate holding company. We are vertically integrated, so we're a general contractor for ourselves, and we are also property managers for ourselves. So we have about 15 employees. We've acquired about 35 apartment buildings in the last 15 months, doing extremely heavy value add. So, $90,000 to $150,000 in renovations per door, and opportunistic stuff. So rezoning, land-based cost arbitrage, stuff like that. And that's it. I was in investment banking and real estate prior to that. I went to the Olympics 3 times as a human performance coach and was a professional ice hockey player. And that's my background in a couple minutes.
Nice. And the hockey, near and dear to my heart, of course, from Minnesota. You're from Canada.
Exactly.
So,
Minnesotans and Canadians are essentially the same people. So.
Yeah. Awesome. Well, there's a lot to unpack there. I want to start with the technology. Take me through a little bit more. Like, what does this really mean? You said that centralized data, tools for smaller investors to kind of clump most everything together. Take me through it. Like, I guess, first of all, why did you decide it was important to start a tech business for real estate?
That's a great question. I didn't know at the time how hard a tech business was to run, so a bit of naivete. But the reason I thought it was important was my prior company I built and sold. It was an investment banking firm in real estate. So essentially what we were doing is we were offering boutique services on the brokerage, on both sides, buy and sell, financing, tax planning, financial modeling for I'd say mid net worth to high net worth individuals. And as I built that up, within 3.5 years, we were doing a couple $100 million in transactions a year. And I kept on hitting the same kind of problems where for the small investor, and I'm talking in relative terms, like small investor meaning people like me and you, and smaller syndicators, people under kind of the 1,000 to 10,000 unit range. I consider things being like mid-size after about 10,000 units. So anything from 5 to like 5,000 units for me is small in my world. And I just realized, like, number one, well, there were a couple problems for me. Number one is accessing the market is complicated, because if you look at all the apartment buildings sold in a year, probably about a third are sold on public platforms like MLS or, Realtor and Zillow and all this stuff.
Yep.
Then you have maybe another third that are sold through pocket listings or whisper listings that, a broker has a listing and he sends it to his list, right?
Yep.
He sends it to his contacts. And then you have another third of properties that are transacted that are essentially off-market properties, meaning that maybe I sent a letter to 100 owners in Orlando, and one of them answered my letter and I managed to buy his property off-market that way. So I kept on realizing, like, how complicated getting access to the market is. Like, there's no supermarket, there's no grocery store for apartment buildings. Like, why can't I just go to the grocery store? I have a couple $100,000 I want to invest and get a feel of all the inventory that exists out there and make an intelligent decision. So I see the market as being very inefficient transaction wise. So for me, I was like, is there some way where we can kind of create a centralized marketplace for the whole multifamily market, and eventually obviously more commercial? And there are platforms that exist that try and do that. Like, you can think of maybe like a 10X or a Crexi, or even an older legacy platform like LoopNet, but they're also all very broker centric. Those platforms only exist for brokers essentially.
Yep.
And there's nothing that's really investor centric. And I'm an investor at heart, so I was like, how can I build a marketplace that's investor centric? And then once that's done, well, having access to properties and inventory is one thing, but you need access to data, and you need access to actual actionable data, what we call alternative data, meaning that data for itself is worth nothing unless you can actually pull insights out of it. Now, there are a lot of data platforms that exist out there. There's Reonomy and CoStar, and there's a whole bunch of them, Axiometrics, but it's mostly all what we call in the data world kind of first level data. So unless you're very sophisticated, it's going to be harder for you to pull like insights and decision making out of that data. So yeah. I wanted to kind of integrate that also into this kind of marketplace concept. And then thirdly, there was the idea of, if I buy stocks on the stock market, it's very easy for me to follow my portfolio and track my performance. If I invest in multifamily properties and or syndications, I have to build my own spreadsheet, and it's kind of complicated. And, I have to I have to kind of do all the legwork. So the idea was, how could we build a platform that does all this stuff together and resembles essentially what a Bloomberg terminal would look like for kind of a mid-level to institutional level stock investor? And that's how I kind of got into that. And I was like, I think democratizing access to real estate investing is a very important thing, because I grew up very poor. I grew up in Los Angeles, and I grew up poor. My parents didn't have much money. And something that's really at heart for me is social mobility and equal access to opportunity. I think that's what makes America great and Canada great, is that you can come from anywhere, you can come up from any neighborhood, and essentially you can sculpt your life, right? I mean, obviously, depending where you come from, it might be a bit harder, but that opportunity is accessible. That door is open. And what a lot of research has shown is that essentially what allows for that is education and access to property. So for me, that's a very important thing. And if you look at the multifamily market at a financial basis, it is the asset that offers probably the best returns, the best risk-adjusted returns.
Yep.
It's a market where there's not that much risk if you look at relative to other types of assets, and it offers pretty good returns. Like, the returns are a bit lower than the stock market, but the risk is just a bit higher than bonds. So you have a really nice mix there, but there's no central market. The data is all kind of, all over the place and fragmented and kind of opaque. and you need a lot of money to get into the game, right? So that's kind of the end game, is also to make it easier for smaller investors to get into the game. So that's why I got into the technology creation of it, and obviously, like I said, a lot of naivete as well.
Is your goal then, you mentioned at the end, to get the small investors, is your goal then to try to make that part of the platform?
Yeah, oh, for sure. My end goal is definitely to create essentially a kind of a Robin Hood, Nasdaq-ish thing for multifamily real estate. A lot of people have been taking a dab at that. I've been talking about doing this for many years, and I've actually been laying the groundwork of it for about 3.5 years now. I think we're probably about 10 years out from that actually being potentially happening, whether it's us that builds it or someone else. A lot of people right now are taking a dab at that through blockchain technology, through crowdfunding and all that. But I feel like everyone's kind of missing the big picture. And I think a lot of people are just too motivated by making a quick buck in the tech startup world, and they're not doing it right. And quite honestly, I'm financially independent, so I'm not doing any of this to become the next tech unicorn or billionaire or whatnot. I mean, I have a beautiful life, and I just want to build things that are really cool and that have a strong impact on people, and that I'll be proud of, and that my kids will be proud of. So I think I'm doing things a bit differently than what everyone else is doing. So
yeah, well, ultimately that's probably going to make you more money in the end, actually.
Probably
By
might
doing
not.
it
It might, but you know what? I don't care.
yeah, I hear a lot of people, and I've been approached by some people that are building tech companies. If I want to partner with them or help fund them or whatever, and the answer I usually get when I start talking and asking questions is they're building it to be able to sell to a bigger company.
Right.
That's their main goal.
Or the essentially get an IPO if they're lucky enough,
Yep.
right?
Yep.
I'm in this. I can be in this for the next 30 years. I don't mind. Like I'm good with that.
And that's a totally different way of thinking. But like I said, likely that ends up being a greater success for you. Now, again, like you said, maybe not, but likely that ends up being greater success.
But it's
You're
like
not
anything in wealth
motivated by
creation. I
money.
think that's the biggest thing that people who are not able to create wealth don't understand, or even keep wealth, which is the second part of creating wealth, is that wealth and money is it's a byproduct. Like it's a secondary product. You can't focus on that. You have to focus on something much more primary and core. The wealth and the money will just follow you. Like it just becomes a second nature, right? You don't even think about it. And the people who are always thinking about it, and that's their focus, they'll never be able to build any wealth. Or if they do, they probably won't be able to keep it. Or if they do, they won't have anyone around them because they'll just burn so many bridges because they're just wealth focused, right?
That's all they focus on. Yeah, they're not focused on, are they making life better for other people?
Right.
Yeah, 100%. The college, tell me more, like why get into education? Why do the college
I've
thing?
always naturally been an educator, I think. I'm so passionate, and I've always been so passionate about knowledge. Like I've always been someone who's been a self-learner. Like I always kind of joke with people, like if you watch Good Will Hunting, the movie with Matt Damon, like that kind of looks a lot like me. Like I've self-taught myself.
You do
so
look
many
like
things.
Matt Damon.
What's that?
You do look just like Matt Damon.
Talented Mr. Ripley.
Yeah.
But I'm very passionate about knowledge, and I learn every day, and I'm always pushing my knowledge base, and I just love learning. I think it's a very important thing. I think we have so much to learn, and there's so little that we know, like right now. So for me, the quest of learning more, understanding more, having an open mind also comes with just the fact that why would you want to learn all that and not share it with people? Like learning it for yourself is awesome. And that feeling that you get, like that, when you finally understand something, you're like, oh, really? Wow. That, like, I get it. Like, that's a great feeling. Like, even egotistically, that's a great feeling.
Yep.
But sharing that with someone else and seeing them understand and have that aha moment is an even greater feeling. So I think because of that, I've always been a natural educator. And I think it also kind of goes to back what we were saying with wealth creation is what's better, giving or receiving? I think giving is better than receiving, because giving is receiving. If you're giving something, you're definitely receiving something as well. So whereas if you're receiving something, you might not necessarily be giving something back. So I've always kind of naturally been someone who's been drawn to sharing, just sharing. And I was in a position where I was like, all right, well, I have all this knowledge in real estate and finance and mathematics and entrepreneurship. I naturally share it. And I was sharing it thanks to social media kind of, and that just became a bigger thing. And people were like, hey, where can we learn like this more in a structured way? And it went from me essentially saying, well, you know what, if you guys want this, I'll give you like a 1-day class on real estate financial engineering on my personal Facebook profile. No money invested into it, like no marketing, nothing. Just me, talking with people who were reading what I had to say because I like to share my thoughts. And it took me like a month and a half to build that 1-day course. I posted it on my Facebook on a Friday at lunchtime. Within 30 minutes, 65 people had signed up for that for like a $1,500 day. I was like, wow, that's crazy. Like people really need this and want this. And I was already conscious of the fact that, obviously in the real estate world, like, if you're not, even if you are college educated, that's very kind of macro and, kind of generalist knowledge, very theoretical, not very practical and not specific. And then in the real estate world, you have all these coaching programs and mentorship programs. And, we know all the people in them, and, they're all doing great things differently. And, they're helping a lot of people, but it's very action based. It's very on the surface. It's really like more motivational based and kind of networking and all that, which is fine. Like that's great stuff. But I think there's a big gap in the knowledge, specific applied knowledge base of real estate investors in the multifamily world. And I felt like I could be one of the people to kind of fill that gap. And that's what we did with the college. So that 1-day course then eventually became a 3-month program, which is now called the Real Estate Financial Engineering Certificate Program. We've already had like 800 people in Canada go through the program in French. I'm converting into English right now and kind of converting all the American differences with taxation and financing, because I've worked on both sides of the border, and I've lived on essentially split half of my life in the U.S., half in Canada, and so we're bringing that to the U.S. now this year, and that's essentially been it. We also built after building that program and seeing the success of it. I think when you build stuff, it's all a matter of listening to people and what people have to say. And I realized that people were also missing more of another side of things, of actually building their real estate business, which I have the luck to also be an entrepreneur and an investment professional and an investor. So I kind of took what I learned from the tech world and from the business world, and I built a program that resembles kind of, I'm not sure if you know about like Y Combinator or 500 Startups. These are all like tech accelerator programs. So essentially what they are is you apply to enter the program. You enter the program, it's usually like 3 to 6 months. And the goal is to kind of like, after that 3 to 6 months, is actually come out with an actual business and an actual product in the tech world. And usually you pitch it to like angel investors at the end of that program, and you get financing. So I said, hey, why don't I apply this to real estate? So what we've essentially done is created the AMREX Accelerator program. It's 6 months. We accept 30 people into the program, and it's 6 months of building your real estate investment company from A to Z, whether that be through the syndication model or through more of like a private investment company. And we help you build your website, your branding, your mission statement, your whole organizational structure using things like Monday or Asana, all your processes, your pitch decks and all that. And, find the proper partners so that when you come out of the program, you're not just an investor, you actually have an investment company.
Yep.
And that's been a really popular program. We've gone through 8 cohorts already now. So almost 250 investors have come through that program and, purchased, thousands of units. So that's really been, it's really a passion thing for me. Like I'm still probably the person, I dare anyone in the real estate investment world that studies real estate as much as I still do today, like on a daily basis. So it only makes sense for me to want to share that with everyone else.
Oh, interesting. One of the things I really like about what I hear from you is whether it's the education business, the tech business, or what you're doing with purchasing, you're finding gaps in the marketplace. You're finding those needs. You're listening to people, and then you're creating something of value for them. And that's what so many people, I think, don't do. They try to force something, and you're just listening to what people need and want, and yeah, you're taking some of your strengths
Yep.
but you're just filling those gaps.
Well, I think there's a lot of there are many keys to being opportunistic. Like I love the word opportunistic, and it's kind of strange because it has a very negative connotation in society. Like being oh, he's opportunistic.
Taking advantage.
I think being opportunistic should be a very positive thing. And it comes back to what you're saying of listening. And I grew up in. It's funny because I grew up in. I was born in Quebec, in the French part of Canada. Grew up in Los Angeles in a very rough neighborhood. Latino and Black neighborhood, gang wars and all that. And I kind of look like I could be anything pretty much. Because of my dark skin tone and whatnot. And came back to Canada after that in my teenage years. But my father was actually half Indian from India. So from Bengal, from the northeast of India. So I grew up with a lot of Asian philosophies, and in the Asian philosophy is much more focused on going with the stream rather than going against the current, and listening rather than talking. And I think that's something very important to understand, that if being opportunistic is not profiting off the backs of people, it's actually listening and being in tune and being sensitive to what's going on, and then just simply, like you said, responding to that. And what's really cool is that you're not forcing against anything. Like it doesn't have to. We hear all this, like the hustle and the all this hustle entrepreneurship mentality. I think it's kind of bullshit, because you shouldn't be hustling and struggling. It should be the goal of entrepreneurship is actually, this is something you should want to be doing. And I don't really want to be hustling and struggling every day. I don't know about you. Like that doesn't sound like fun to me. Like we have only one life to live, so we should be doing something very productive and fun and value creating. And I don't think that comes through, trying to always go through walls. Yes, there are obstacles, and yes, you have to persevere. But for me, when I hit too many walls, Matthew McConaughey wrote a book about this lately called Green Lights. It's like, if you hit too many red lights, maybe you have to rethink the path that you're on and start looking for the green lights.
That's powerful. I mean, yeah, if you're banging into the walls all the time, if you're hitting all those red lights, are you really serving your audience, right? Are you serving who you're supposed to be serving? You got to ask yourself that. Or are you just trying to force what you think is right, what you think is.
And sometimes, I mean, that's a fine balance. Sometimes it might be the right thing to do, but that can't be like consistently what you do.
Be consistent.
No.
Yeah. You're going to come up with hurdles. You for sure are. You're never going to have a complete, and if you do, you're probably, again, doing things wrong. If it's a completely, open path, you're probably still doing things wrong, but
absolutely.
But yeah, I like I said, just you're finding those gaps, you're filling the needs, you're listening to people, you're slowing down and hearing what people want to actually get, and then okay, I can do that. Like that's something I can fill. So let's talk about this the investing side of the business. And that was really interesting. I won't mention the city just in case. You can go ahead and mention that. But what you found is an area that had been kind of neglected.
Right.
You saw an opportunity where a lot of money was starting to get poured into that money or into that area. And you're kind of riding that wave and backfilling again the gaps that are there and providing good housing in that area. You mentioned that you're doing $90,000 to $150,000 per unit renovations, so huge renovations. You're taking these properties that were probably completely neglected. A lot of times, I would guess boarded up, completely empty, and you're bringing new life into them. First of all, like that. Like, how did you decide? Like, that's a strategy I even want to think about. Or take me through that journey, because most people don't have the guts to do something like that.
Well, I mean, you have to understand. I mean, I do have, I've worked on over $10 billion worth of real estate transactions, so I do have that professional baggage there. Mm-hmm. I've been an entrepreneur, and I've created hundreds of jobs over the last 15 years. So I have that baggage. I was a high performance athlete. I was a high performance human performance professional. So even if it kind of came out of nowhere, it didn't really. Like
It wasn't one day you woke up and go, hey, I'm going to go do this.
There's a tip of the iceberg and then there's everything behind it. It's like, I've been building towards mastership and mastery of my art for quite a long time. But essentially, in my job in real estate financial engineering, one of my jobs, obviously, real estate financial engineering, just so people understand, is kind of like, everyone knows about underwriting and financial modeling. That's like one part of real estate financial engineering. So there's two sequences to what I do is essentially generating alpha. So, creating better returns without necessarily taking the equivalent amount of more risk. And obviously risk management's a big part of financial engineering. So in that, one of the big parts of the work that I did with, family offices and private equity funds and private equity firms and REITs and everything is determining which markets to enter and which neighborhoods to enter in various markets. Yeah. So, I look a lot at like economics and demographics and, political structures of various cities and metro areas and stuff like that, because politics play a big part of the future of a city or of a town. So I had identified this market actually for a couple of clients in the past, and just my overall research of I'm always researching markets, and I looked at this market and I was like, it's a secondary market, so it's a smaller market. It has about it's a market if it has about 200,000 people living there, but it's the center, it's the capital of a region essentially. So it has 2 universities, 2 colleges. In the state, it's a province, but for Americans, we'll call it a state. In the state, it over the next 20 years, it's the city with the second highest projected population growth, behind the major metro area in the state. So it kind of checked all the boxes. I looked at average incomes versus rents. The ratio was really low. It was something like 24%. A healthy market's around 30 to 40%. Yep. Above 40 is it's getting expensive. Like you can think about places like Seattle and Denver and New York and everything. So very, very low salary to rent ratio. Rents were really low, like 2 bedrooms. Like I'm picking up properties that have 2 bedrooms that are renting at like $470 a month, like wow. $550 a month. It's crazy. Wow. So all that put together, on top of, as an entrepreneur, I'm a big believer in the blue ocean strategy. There's a book on it. I can't remember who wrote it, but it's a great book. And I apply this to everything I do. I like to look at where the waters are blue and not red, filled with blood and sharks, and where everyone is already. So the major metro area in this state, which is Montreal is a highly competitive market. It's the Miami or the New York it's the Miami or the Seattle or Los Angeles of Canada. So it's very competitive. Apart from Toronto and Vancouver, Montreal is where it's at. So I was like, that's a red ocean. I don't want to be there. I want to be somewhere else. I want to be blue ocean. So that all checked the boxes demographically, economically, blue ocean wise. And then on top of that, I went a bit deeper and I looked at the different neighborhoods of the market, and I realized this downtown core is destroyed. It's been let go for the last 20 years. And through my studies of zoning and urban studies, urban planning, and how cities develop, is something that I've studied quite a lot. The way cities usually develop in the Occidental society is that, well, even in the Oriental societies, is that the downtown area is usually very eclectic. There's a good mix, but there's also quite a lot of money. Even though there's poverty, there's quite a lot of money, yeah. And there's a nice mix. Kind of, it's kind of that's where the heart of the city is. It's vibrant, and then around that, then you have kind of a deeper level of poverty. Kind of what we call the inner cities, what people think about like ghettos and stuff like that. And then you end up in the suburbs where there's, less poverty, a lot of money, but not as high level necessarily as downtown. But in this city, for some reason, the downtown was just like completely devastated and poor. So for me, that's an anomaly. That's an anomaly in urban studies. So I was like, okay, that shouldn't be the way it is. Therefore, it should be there should be a way to change that. And then as I looked deeper, I realized that the richest family in the area, who was also the biggest real estate developer, had just announced an $85 million project with the city in the downtown area. So I was like, okay, this is like checking all the boxes for me. So what I'm going to do is I'm going to piggyback off of them. And I like this because it goes with the blue ocean strategy. If you study whales, like blue whales, which are the biggest mammals, there are a lot of smaller fish and mammals that live off of them and ride on their backs.
Mm-hmm.
So I was like, I'm going to do the same thing. And now as a real estate financial, especially someone specialized in real estate financial engineering, I'm always very cognizant of risk. So in order to mitigate my risk, because the risk here is how long is it going to take for this downtown area to actually get better? It might take 5, 10, 15 years. I don't want to wait for that. And I don't want to risk that. Yeah. So what I'm going to do is I'm going to allocate so much capital and buy so many properties that I'm the one who controls the speed of the recovery. So essentially what I did is I purchased 35 properties in a 2-mile radius. And I'm the one investing in all these properties behind the bigger developer. So I'm the one controlling how fast it's going to go, how well it's going to be developed, creating essentially a monopoly effect. And on top of that, what it's done is I've become like a big whale on top of the really big whale, but that's also now created a whole bunch of smaller fish who are seeing what I'm doing, and it's more accessible to what they're doing, and then that's bringing even more people. And now that movement is just going crazy. So now it's kind of now red ocean essentially.
Yeah, but that's good because that feeding frenzy comes and
exactly
you're looking pretty good when
for sure
frenzy really comes.
And now cap rates have compressed from an average of about 5.95% now to about 5.15 in a year and a half just because of that.
Wow. Yeah. Yeah, that's a great strategy. I mean, it's not for the faint of heart, right? You have to know what you're doing. If you're going to go out and do something like that, you have to be well capitalized like you are. Otherwise, just wait until it's in the fourth, fifth inning. Wait until somebody like you comes in, does it, and then you can come in behind them. And the people, quite frankly, a lot of the people that were coming in behind you are still doing well. They're going to make money.
Sure, definitely.
They're going to do well. Eventually, you'll have the people that got in at the ninth inning or in overtime.
Absolutely.
But right now, they're still riding that wave up. So that's cool. What's a mistake that you've made and how have you learned from it?
Probably the biggest mistake I made younger was, I was going to say trying to go too fast, but I don't think that's necessarily the mistake. I do think that, I at times tried to go too fast, which is kind of weird because, when I talk about what I'm doing right now, people will be like, yeah, but you're going like really fast. Yeah, I'm going fast, but not as fast as I could versus the resources and the experience that I have today. Yeah. But probably the biggest mistake was that and not having the right people around me. I think, I don't believe in self-made. Arnold Schwarzenegger actually had a really great speech on that. I don't believe in self-made. I don't think it exists. I don't think you can really succeed at anything significant alone. You need people around you, whether it be friends and family, business partners, mentors. And I think, I had a lot of success in my 20s and then, had a major failure, pretty much lost everything. And I'd attribute that all to having just the wrong people around me, not enough of the right people around me. And today, I'm really big on, getting people around me. A book that really affected me was From Good to Great by Jim Collins, of his concept of having the right people on the bus, number one, and then having them on the right seats. I think, we don't focus enough on having enough of the right people on the bus. The seat thing, that'll kind of fix itself eventually if you have the right people. And, that was the biggest mistake I made. And now today I'm willing to leave a lot on the table, to leave shares on the table, to leave cash flow on the table, just to make sure I have really the right people. Yeah. And it pays so many dividends. It's incredible.
Yeah. I hear you there. I mean, there was definitely some times there where I thought, oh, I could just do it myself.
Yeah.
And, sometimes it works, sometimes it doesn't. But when you got that team, when you got those people around you, it works way better. Plus it's just more fun. Like it's
Yeah,
way
for
more
sure.
fun having people
For
around
sure.
you.
Oh, for sure. And there's an African saying, I'm not sure from which country or which tribe, but it says the saying is essentially, uh, you know, faster alone, but further together.
Mm,
Meaning you can
yeah.
go way
So true.
further with other people.
Yeah. Yeah. So true. So true. Um, all right. So we're gonna wrap up with just a couple last questions. What's a favorite book of yours that you can give to our listeners?
I'm starting to sound kind of like I'm always repeating myself because I've been on quite a few podcasts lately, but the Untethered Soul for me is just, I think everyone should read that book. It's
What's that
amazing.
about?
Essentially, it was a tech founder who he had started this huge business. I believe they got bought out by IBM for like $1 billion back when $1 billion
Wow.
was like back in the 90s when $1 billion was like worth like a gazillion dollars, like not today's $1 billion.
Yeah.
And he ended up getting sued because of a partner that had stolen funds or whatnot, and they were blaming him. And he ended up, getting sued and being in court and almost went to jail. And it lasted like 5 years. He got a really bad cancer, almost died.
Hmm.
And he managed to get through all of that. And it really brought him to a higher level of spirituality and purpose and mission and faith. And he wrote this book on that now. And I just really find it as a great book because I think spirituality and faith, no matter whatever someone's faith is. I mean, I think everyone can have their own faith, but I think it's a very important thing to have faith and spirituality in your life.
Yeah.
But to have that written by an entrepreneur, someone who's very pragmatic and very logical, I think it just makes for a great mix. And the book is just there are times in my life where I was feeling anxious. I had a lot on my back, on my shoulders, a lot of stress to deal with. And I'd always just kind of come back to that book and just read little passages here and there. And it was, it was always so good to just kind of bring my mind back into the right place.
Yeah. Yeah. Cool. That's great. I'll have to check it out. Last question. What are your 3 pillars of wealth creation?
3 pillars of wealth creation. I think, like we talked about earlier, is always trying to distinguish how you're creating value. Like everything you should do should be about creating value. Number one, that's important for me, I think. Number 2, not focusing on wealth is definitely a wealth creation pillar.
Mm-hmm.
So that could kind of go with the first point there. Long-term thinking, definitely. I think if you're thinking short term, you won't create any wealth whatsoever. And I'd say number 3 is having smarter, more talented people around you. Like if you can do it like that, you'll end up wealthy.
Yeah, for sure. Sure. Well, love it, Nikolai. Good stuff. Really appreciate you joining us. So we could keep going for a while here, but for the sake of the show, we probably should wrap up. How can our listeners get in touch with you, learn more about what you got going on?
I'm pretty active on Facebook, LinkedIn, Instagram. So you can find me, Nikolai Ray. I don't think there's 2 Nikolai Rays in the world. I'd be
Probably
surprised
not.
if there were. Otherwise, the AMREX College as well on YouTube, Facebook, LinkedIn, Instagram. We're sharing a lot more stuff in English now. We have a huge body of work in French, and I know a lot of people have been asking me to do it in English. So now we've really started to produce a lot of content in English. So I think that's a great way to follow me, and I'm always happy to talk shop and push our knowledge base further. I think real estate's an amazing thing personally for people, and I also think brain wise, it's an amazing thing because there's always something new to learn. So
that's great. You kind of have this like French, Canadian, English accent, like kind of like commingled together. So
French, Canadian, Californian accent.
There you go. Yeah. It's all mixed up. Perfect. Well, hey, again, really appreciate it. Thanks for joining us on the show and tons of value you're able to add. So have a fantastic rest of the day.
Really appreciate it, Todd. Look forward to eating some barbecue with you soon.
Yeah, let's do it. Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.